Deal Surgeons, Elite Masterminds, what's going on? This is Diamond Life. Just breaking down today. And the date is September 7th, 2023. And I wanted to break down the ICT Silver Bullet, what I've been practicing, because I do like more of like a long-term swing type of thing, but I also need to still practice day trading. So I just want to explain how I didn't take any live trades. I just kind of looked at price action, but I just want to break down how this was a perfect silver bullet, because ICT says wait, you shouldn't be trading around 9:30. He said wait until 10 because there's going to be immediate price reaction right at 9:30, which is true. So if we look right here, this is 9:30, boom, huge candle. ICT says wait to 10. Okay. Wait to 10 to start looking for something if you're going to do the silver bullet thing. So 9:45, 9:50, 9:55, 10 o'clock right here. So if you're looking at the structure, then it's like, okay, well, what's left? You got a bullish order block down here, the last two down close candles. Because this is a 5-minute chart, but on a 15-minute chart, this is all one candle. So what was taken was buy side right here. And so we got a gap right here. And so I believe that price has to come in and fill in this gap. So based on a silver bullet, you will mark up the bullish order block down here. And I would have been looking for a short based on an up close candle. Because remember, ICT says we need to buy on up close candles, not down close candles. So I probably would have got in right when price is pushing up here. But see, you can't buy an up close candle unless you know that price has to come down here. So what I would have done, I would have got in right here and I would have put a stop loss up here above this candle, and I would have set, since I didn't actually know price would come down here, I would have put a take profit at the middle of this gap right here, which is consequent encroachment. This is 50% of this gap right here. I'm just telling you what I actually would have done, even though price action already happened. This is not live. Okay. So I would have got in right here. I would have had a TP for right here, a TP for, which is take profit for right here. And then I would have had one at this order block down here. And then one for down here. I probably would have thought price would have kept going. But if we actually look at price, you could have got in on a short, because remember, we're supposed to go short on up close candles. So I would have got in here, stop loss here. I would have had a TP for down here, a TP for the bottom of this gap right here, and at this order block, because it could have hit this gap and then just reversed up. It could not have came down here to the order block. But you see, it's perfect, man. This stuff is perfect, the way he teaches us how to do this stuff. It literally came right down into this order block zone. See, I don't know how often you study price action, but on the lower time frames, you got to definitely look at the last two candles. Like, okay, this is the 5-minute chart. Let's say you didn't want to go to the 15-minute or the 30-minute. You got to pay attention to the last down two candles. Okay, because a lot of times on the lower time frames, it's not going to come down to the last down close candle. That's why ICT says, stop teaching my order block if you don't know it. I definitely know it. Okay, so I study this stuff a lot, and the last two down close candles, even on the higher time frames, is something you got to pay attention to, because a lot of times it won't come down to the last down close candle. It'll respect the one before that. But you have to see that yourself. So I would have got out and been in profit here, and I would have been done. I mean, I wouldn't have known that this would have just pushed up like that. Or what you could have did was you could have just waited to see if price respected this bullish order block. And then you could have went long right up in here. It would have been scary. You could have went long right here on a down close candle. And you could have put a stop loss maybe at this candle high right here, the last down close candle. And you could have just got out. I would have got out at the top of this, the close of this green candle, because I don't wait for candle to go to the wicks. because you're gonna get messed up like that. I actually go towards the close, the institutional price. That's what I go after. That's what ICT talk about. The difference between wicks and candles is a whole study within itself. I'm talking about months and months and months of study. That's why when people say you can just come in and just learn this stuff all fast, I'm like, man, please. You know, I mean, I know people have like those 5-day programs and stuff, and I guess they do work, but they must be teaching some kind of strategy. So I guess it could work. But to actually learn the structure itself, definitely going to take time, because just because you know how to do something don't mean that you're actually going to do it when you actually put real money on the line, or even if you're in demo. Well, it's easier in demo, but when you got real money on the line, you need to know that you know that you know. So it's going to take a lot of time for you to like, you can know a strategy, you can see it work and get all excited about it and back test it, but to actually see it happen in real time, that's where the challenges come, because when it don't happen like the way you want in real time, you're gonna be frustrated. So here's the macro, the lunch macro, 1050 to 1150 to 1110. He says, what's left over? So if we go, this is how I back test sometimes. I don't have like the software and all that, which I need to use. I just do it like old school. I just literally just act like it's nothing to the right, or I'll get like a black box and black out all of this here. This is not the way you should do it. Get the software and stuff. I'm just kind of old school. I got an old soul. And then I'll just block all this out and then try to predict what price is going with a black box. So ICT says what's left. When you do the macro, you got to look at what's left. So, you know, buy side or sell side was taken right here. And then buy side was taken. So right here, I mean, I probably would have got stopped out, because I would have been probably thinking prices are going to come down here, because the only thing that was left, according to the way he teach it, is sell side. Buy side was taken, but it kept going up. So, I mean, I probably would have got stopped out or something here, doing this macro thing he talks about. So this box right here is a lunch hour. This is something that nobody's talking about but ICT. This is a lunch hour. Now, traders don't go to lunch anymore, but like he says in his teachings, the algorithm is mimicking what price action has done since all this stuff got started. It's an algorithm controlling all this. This is what we believe. So ICT says if we see a retracement after lunch, then it's going to come for the lows. Okay, so we see price going up, and it should continue to go up. But now we got this candle right here that opened above, which is a SpaceX candle, opened above here, which I call a SpaceX candle. It opened above here, and it opened above the green candle, and it closed below. So this is like a dead giveaway that is trying to take out these lows right here. So ICT says if we see a retracement, it's going to come for the lunch lows. What's the low of the lunch? The low of that green candle right there. So now we see price switching, and now it's going for the lows. Boom. That's classic ICT right there. And this trade right here has helped me in the past, you know, when I really was day trading, because right now I'm learning more of I'm learning more of the long-term macro. I'm learning more of like where price is actually going long-term. And then I can come down here and play with the day trading stuff here and there, but I want my long-term positions in stuff I can hold for a week, 3 weeks, 2 months. That's kind of stuff I'm looking at now, because I'm like, if price action is going to go in one direction anyway, then why not take advantage of that? All right, so these lines on here, I don't know how you do your day trading, but this is the 820 CME the ICT talks about. So I have this on here. This is 930. This is 930 right here. This yellow line. ICT says wait until all the foolishness happens. He says wait to 10, and then do the silver bullet, which is from 10 to 11. Okay, it's multiple opportunities to day trade with ICT stuff, man. It's crazy. And here's the macro right here, where you can take a trade, and he says what's left over. So I guess the way he teaches it is on a 1 minute chart, because he normally does this on a 1 minute chart. I guess you probably should have went long up to this candle high right there. So that's another macro. He says that happens every single day. And then I have the 130 King trade on here. This is 130. This is another macro. ICT says look for a swing high or a swing low after 130. Sometimes when my back testing, you can look for the swing high before or after, because actually this is a swing high before 130. I put it on the bodies. This is a dead giveaway right here. This is a SpaceX candle. It opened so high above, so it told you it was coming for this low. Or I would have bet for it to come for the low of this red candle right there. This is a SpaceX candle. This is something that I created and something that I saw with the SpaceX candle. So on the lower minute time frames, you're taking a chance. Like if you see a candle jump up above this, you have to verify that it looks like this, like on the 15-minute chart and the 30-minute chart. Definitely on the 15-minute. If you see it, then it's definitely going to take out this low, because you see it right here. This looks like a SpaceX candle as well, but I don't think it took out this low, did it? Let's see. Well, it might, but the way it works is if it takes out this high, it's invalid. Because you can see, like with the SpaceX stuff, you'll see candles come all the way up to right here. It even take out the open right here. I'm sorry, the closing price. But as long as it don't take out that high, it's going to take out this low, or the wick low. So it might be this as well. This looks like a SpaceX candle. But as long as it don't take out this high, then according to the structure, I'll be looking for it to come down here and take out this low or this low. But if it takes this high right here, then it's invalid. So, because look, it opened up way above it. But sometimes it'll come up into mean threshold of this, not mean threshold, but it'll come up into 50% of this candle, or even come all the way up here and still drop. And so when it drops, I'll be looking for this low or this low. Okay. So we'll see what happens, because this is live right now. But I'm just explaining these lines. I think these lines are important. With day trading, look at this right here, these last three lines right here. Oh, let me finish explaining this 130 thing. So basically the way it works is he says you need to look for a swing high or swing low before or really after 130. So I guess this is kind of like a swing high right here. And we got the low right here. It broke down. And then you basically mark up the liquidity areas based on the bodies of the candles. So this will be one. This will be one. Because I'm looking at the bottom of the red candles. I'm not looking at the wicks. So I guess this could have been, you could have went short here. Actually, you could have went short when this range was broken. What range am I talking about? I'm talking about this range right here. This is 130. He said wait until after 130. So if you look right here, if I turn on the line chart, you got a swing, and you should be using the line chart, by the way. Turn on the line chart. It'll help. So this is 130. We're looking for a swing high, swing low. Here's a push up. Here's a swing high right here. So we'd be looking for this range right here to be broken, either up or down. You see it breaks down right here. So when it breaks down, now we're looking for areas of, look, where's the money at? The money is below the lows. So this is a dead giveaway, because this is lunchtime. This yellow box is lunch. So ICT says if we see a retracement after lunch, price is going to come for the lows, or it's going to come for the highs, depending on where the retracement goes. So this is a swing. This is a dead giveaway. So I would have put on like 3 positions, got out right here, definitely got out at the lunch lows. The lunch low is the bottom of that green candle. And then I probably would have got out right here and right there. That would have been my little 3 positions, 1, 2, and 3. I would have got out right here as well. So, but that's if I put on 4 positions. I probably would just put on 3. But this is you probably want to do this on a 1-minute chart, according to ICT. I'm on a 5-minute, but he teaches to train your eyes to look for price action on one time frame. So I've been training my eyes to do it on a 5-minute chart for a long time instead of the 1-minute chart. Now, these blue lines right here, I'm just explaining these lines in day trading, because I think this is important. Now, Now, the blue lines is very important because this shows you when price action is usually going to reverse. So if you don't have lines on your chart, you should just have it in your head. But at 2 o'clock, price is reversing. So if it's been going up around 2, what is this, like 2:30? Around 4, this is the military time, around 2:30, 2:30 or 3 o'clock, price is trying to reverse. So if it's been going up all day and then 2 o'clock, 2:30 hits, go ahead and back test it. You ain't got to believe me. You'll see that price is reverses. That's why I have these lines on here. Now, it's not set in stone. Price doesn't always reverse. Sometimes it could keep going up, but 80% of the time, 70% of the time, that bad boy is going to reverse. Now, this has been a choppy day, so we haven't had like a real price action swing. Like right here, what time is it? See, this is 1 o'clock. Sometimes it'll reverse early. This is 1 o'clock. So it reversed for the day 30 minutes early. So you see it was going down all day. This is yesterday. It was going all day, down all day. Then right at 1:30, it reversed. And then it went up and consolidated for the rest of the day. So that's why you need to have these lines on your chart to let you know, like, hey, I need to be looking for, because like, think about it. If you don't understand this information, you would have just stayed short all day. Like, yeah, I'm just gonna hold my long, not knowing this information and how price actually works. I would have had my 3 lines on here, like, okay, well, I need to be looking for, like, when price was right here and it just kept going down, I would have already had my 3 lines at like 2, at 1400, 1430, and I'd be like, okay, well, I'm going to keep holding until it hits 1400. But then when I start seeing these huge candles, I probably would have got out right here after that candle right there. I'd have been like, you know what, the hell with that, because that means you giving money back to the market now. All this that you got right here, now you starting to give it back. I just would have got out because I understand that this is at 13.15, which is 115. But I understand, I'm like, okay, well, maybe price just reversed, because some people would have held on and they would have thought price would have probably took that low and kept going all the way down into 1400 or 1430 and then reversed up. Another thing that could have saved you in this situation was ICT's mitigation. I probably need to go down to the 1 minute chart. Hold on. I'm about to end the video. It's not going to be a long video. I don't even know why I'm shooting it. I just thought maybe I should shoot a video because I understand this day trading stuff the way he teaches it. So I'm going back to yesterday on the 1 minute chart. Now, what could have saved you is if you understand ICT's mitigation, bearish mitigation. Okay. So what that is right here, this is a mitigation block. Okay. A bearish mitigation block, according to ICT. It's the last down close candle before the low is hit right here. So I would have marked this up and pulled it all the way to the right. Okay. So I'll shade this red and take that. And then I'll take the yellow off. So this is a mitigation block. So this is something that can save you if you're going short and you don't know. Or see, this is something that I really understood back in November last year, and I thought I was like a god or a king at the time. I was like, wow, I see how this shit works. I used to see price dropping. I'm like, I remember thinking to myself, like, I just wish I'd known how to know if price is going to reverse or not, if I'm in a short. But with ICT's bearish mitigation, you can actually jump in on a short and you don't have to even know where it's going. All you got to do is follow the structure. And what I mean by that, this is what I mean. So when you see these displacements, what ICT called displacement, when these huge candles pushing down, you can mark up the last down close candle before the push down. And that's the ICT bearish mitigation block. Okay, I'm zooming in for you. The last down close candle, not the wick. Because like for instance, this wick right here could be all the way down here, right? And some people will mark up that wick candle, but that's the wrong candle. It's the last down close candle. It's where the candle closed the lowest, because this wick right here, it could be all the way down here. This wick can be a lot lower than this one, and you still have to mark this one up, if that makes sense. So right here, I see another displacement. I probably will actually go down to like the 30-second chart to actually see a clearer picture, because ICT trains us how to go down to the lower time frames because price action is fractal. So actually, I see two mitigation blocks right here that we could mark up. So if you was in on a short and you don't know where it's going, if you understand and if you back test as mitigations, then it'll help you understand where price is going. So here's one right here. Here's a down close candle. Then we have this huge displacement down because we got a gap right there. So this is a mitigation block on a 1 minute chart. So you still could have held short because sometimes price will go down. When this is how it works. When price goes down and you mark up that last down close candle, it can come back up in it, but it can't close above it. You see, and this is how you can, when it closes above it, that means you get out. So I'm about to explain this to you now in the video because I really think this is fascinating. Here's another one right here. Okay, so we got another mitigation block right here because we have a displacement. Now remember, we don't see, I need to do it like this. We don't have all this price action. All we have is this right here. Boom. You see that? We have gaps. So I'm definitely, I would have held my short. Let's say if I got in right here, let's say this was yesterday and you just got in because you're like, oh, it's going short and you don't know where it's going. This is reckless to do it this way, but I'm trying to show you how to mitigate your ignorance or mitigate your potential loss. If you understand ICT mitigation, let's say you would have got in right here and you just held your short. Okay. And you're like, okay, well, I'm just going to hold it short. It's probably going to go short for the rest of the day. So if you don't know where it's going to go, you don't have your quarter points and stuff set up, then what you can do is you can study ICT's bearish mitigation block. This stuff is powerful, man. Because if you would have just held your short right here, why? Because you didn't see price coming back up into this red area and you didn't see a candle close above. As soon as you see the candle close above, you get out. You get out. Okay, so you held your short right here. You see this candle right here. It looks a little crazy. Boom. Displacement. You got a gap. You're like, okay, well, I'm still going to hold short. Why? Because no candle has closed above these last down close red candles before the big push down. You see that? Let me zoom in a little more. Just look to the price action to the right. We got gaps up in here. So now it's 130. Now remember, price action usually reverses literally at like 215, 230 usually. Just back test it. Don't take my word for it. Well, let me finish drinking my drink. All right, so when you see this right here, you still gonna hold your short. See, this is why you can't be greedy in this business, because you have to literally hold this stuff until the structure tells you to get out. Right there, it told you to get out because what? It closed above the bearish mitigation block. Now let me mark up a few other ones. Now I would have got out literally right there. I mean, the structure is literally telling you exactly what to do. I mean, what the hell do we need indicators for? It's just like ICT talk about. I'm not part of no religion or no cult, because people try to say that with ICT stuff. I'm like, nah, this shit is just the real shit. Like he talks about. This is the real shit. Here's a mitigation block right here. So why would I sell my short? See right here, I'm still, see, this is the problem with this business with people. This is why they say you can't be in this for the money. You have to be in this for the game. Because right here, it would have been scary. If you put on a large leverage position, this is perfect ICT mitigation. God damn, this is beautiful, man. This is beautiful right here. So you literally, this is a mitigation block, the last down close candle. See, the wick was longer right there, but I had to mark up the lowest down close candle. Now, when price was coming up here, most people would have got scared and sold. But why? You're not supposed to sell until price closes above this candle, above this zone right here. This is the mitigation block. See, you're getting out way too early, not understanding ICT shit, man. I'm so fucking sold. It don't make no sense. Because I see it. I see it every day. I'm like, this dude is literally giving out the best shit on earth for free, and people not studying it like their life depend on it. If they in a situation they don't want to be in, that's crazy to me. I'll be giving this everything I got if I was you. Okay, so here's the lowest down close candle with a wick, but I'm gonna mark up this candle here. Or should I mark this one up? This one is lower. This is the lowest down close candle. So let me just mark this one up. But on investing.com, it looks different from TradingView. Maybe on TradingView, this one right here probably would have been a little better. But look, I'm just trying to show you how you could, I'm going to end this video, but I'm saying, let's say if you're using a short right here, what time is this? Let's say you did the silver bullet thing and this is from 10, he said it's from 10 to 11. Let's say you would have went short. This is what I actually did yesterday. I went short. I should have filmed it, but I went short. And because I went short in the macro, the 1055 to 1110. And then I was like, I don't really know where price is going. So I just did the whole bearish mitigation block thing. Here's another one right here. Last down close candle before the big push down. And then price was doing all this and I was holding. It was scary. And then right here, when price closed above, I got out, but I shouldn't have, to be honest with you. So I made some money, got in here. What did I get in at? That 11. Yeah, so it was damn near break even because I think I got in around here and I held through all this choppiness. But when I seen price close above this last down close candle before. Oh, you know what? Hold on. Yeah, I got out right there, but this was incorrect. I actually didn't mark this up all the way properly because doing it with a few other ICT strategies, this would have showed me I should have stayed in. And this is investing.com. So sometimes the green candles are really like the red candles are sometimes green, but I still like using it for day trading, investing.com. But yeah, I mean, let's say you got in right here. Like I said, you could have just held all the way down. You see no candles came back up into this red candle until right here, boom. And then price reversed on you. Boom. You see that? As soon as it closed above right there, that's why I got out right here because I thought it was reversing. But I kind of got in recklessly because I understand how the structure works. And it was kind of hard holding through all this, but I'm like, okay, well, as long as no candle closed above, I really thought price was just going to reverse right here. I put on another short and then I took a loss right there. And so I just made like a small amount. I think it's like $430 instead of $1,600 or something. I was mad. So I'm just showing kind of the ICT day trading and how all this stuff works. Mitigation blocks. Thanks for watching.